I'm Aiden Sprower. Thank you for joining me. We're starting to see a bit more pressure towards the government in reference to policies. That's something that I've noticed over the last couple of days. We had the president of the Professional Mortgage of Canada come out today, Mr. Paul Taylor, and just kind of start to put a bit of pressure on the federal government. Kind of telling them, hey, you're really putting a strain on young people and families to be able to afford a home. And what they're referring to is has to do more than anything else with the stress that was implemented. So the stress test has really hindered in reference to the availability of somebody to qualify for a mortgage. And what I'm seeing out there is even though the market is not in great shape, prices haven't really come down to a point where it's going to become affordable for their average professional. And the reality is, for that to happen, particularly in a city like Vancouver or Toronto that are highly in demand cities, downtown core or just surrounding the downtown core, even if prices came down 20%, 25%, it would still be very unaffordable. So you got to think, if a house is worth $1 million, comes down 25%, 750,000. Is it more affordable than a million? Yes, it is. Is it really affordable? No, it probably isn't for the average, young person that wants to buy in, or a family that's looking for a starter house or townhouse for that matter. So you got starting some associations to start to put pressure on the government. And I think that's kind of the next step that we're going to be seeing over the next couple of weeks. It's starting out putting pressure on the federal government. What the Association of Mortgage Brokers are, the Professional Canadian Mortgage Professionals of Canada, want is to put that pressure to see if maybe they will realize that it is putting a strain in the ability of people to buy, and we should maybe consider to reducing that or maybe even removing it. I don't particularly think it just has to do with the stress test. I think that the overall slowdown is also a global thing, not just have to do with current policy. Definitely policies are not helping, and they are putting a kind of a damper on everything. But it also has to do with the economy. We've talked about this in previous videos. China, you can really sense there seems to be a lot of negativity as well as conflict between China and Canada, China and the U.S. And that's not good for worldwide economy. And what we're seeing is a slowdown overall. I mean, China itself has lost a substantial amount of money. We're talking billions of dollars over the last year that have just dissipated from the real estate market, from the stock market. So there's a large constraint economically, and as much as people don't want to accept it, China really is a big player and a big mover, like the U.S. is, right? So anything negative that's happening in China, especially in our Vancouver, Toronto markets, we're so interlinked with the Asia economic market that it's definitely going to affect us some way or another. So it is starting to feel it, and what these associations are trying to do is put a bit of pressure on saying, hey, well, we got this happening, but we also got the stress test, which is even putting a bigger dampen. It's not good. You should reconsider these policies. You got to remember too the amount of GDP that comes from the real estate construction sector is quite large for Canada. We're about 30% GDP for Canada, and when it comes to construction and real estate. Of that, you're talking about maybe about 20. I will just take my notes. 22% in BC, anywhere between 15 to 22%. But we're talking about $22.9 billion that are pumped into the BC economy based on construction and real estate and those jobs and mortgage brokers and assessment. There's a big economy based on real estate and construction. So as much as we want to hamper it down and bring it to a stop, we are gonna feel it, the effects of that in the overall economy. And even though you may not think, oh, who cares, prices come down, maybe I'll be able to afford it now, it's all good news. it's not that all great news for the overall economy of BC. So, you want to be able to control to some extent the pricing, try to keep it level of, somewhat affordable for people. But the reality is these markets, Vancouver, Toronto, they're global markets, and we're not the only market like this. And you take a look at New York, London, Singapore, just to mention a few. I mean, these are three of, I could probably point out 50 markets that are in the same position as Vancouver, which they're in demand. Canada itself is, as big as a country as it is, there's really not much going on between Vancouver and Toronto. There are, of course, other, major cities out there, but they don't seem to have that appeal or demand for people to go there. Most people want to come to Vancouver or Toronto because the jobs are there, even though there might not be, great paying jobs as they give you a sense of a lifestyle that a lot of people want to attain. A lot of people that are retiring that maybe lived in Winnipeg or Edmonton or were freezing their butts off for the last year, they want to retire in a place where the weather might be a little bit better. Not to say that Vancouver's weather is the best out there, but in Canada, if you look at it in Canada, it is kind of the best out there. So, that's a big draw. And again, Canada it's a huge country on a map, but when you actually look at it, we're only a couple little cities here and there in the middle. And the best two cities are Vancouver and Toronto. So it is normal that there's such demand for these cities. So, we are going to be seeing some pressure from different associations, builders, mortgages, probably real estate associations, trying to pressure the government to reconsider policies so they maybe remove them or try to see what happens there so that the economy can pick up on that side of real estate thing. I don't think that it necessarily is going to work. I think that it's a more global situation right now, not so much the stress test. Of course, it's not helping, and it is making things harder for people to buy, but it's not everything. On the other hand, though, what I do see is, the fact that people are not willing to jump into the market or are not qualifying for a certain amount for them to jump in now, even though prices have slowed down and come down a little bit, we're putting a huge pressure on rentals. And one of the things that this report came out and said was that, they did a study and they took, I think it was 260 case studies. And out of those 260 case studies, they noticed that, 202 of those case studies, it was still better to try to find, to try to buy than to rent. And that was all based on economics, on the affordability side of things. The rents are just so extremely high. And when you see this on a report, it's probably based on, Vancouver and Toronto, which is the main cities. When you see the amount of rent that people are paying, and we've talked about this in previous videos, it's just mind-boggling. And because they're not able to qualify to maybe try to buy something, it's just putting more demand on that rental side. So it's becoming a landlord's rent dream right now. You're paying prime 2,300 for a one bedroom in downtown Vancouver. I'm not quite sure of the numbers in Toronto, but I don't think they're that far off, or they might be even a little bit higher than they are here for a one bedroom property. So you do want to give young people in particular and families the ability to find a way to get a certain amount if they do want to jump into the market, right? And it will put some relief on the rental side of things, and that's a very important aspect and something we should very much consider. And we'll have to see what the government says about that. It is an election year. I think that the Liberals are trying to tout out there and say, hey, guys, they came out. You got Bill Morneau that came out and said we're going to be doing something for young families and affordability for young people. He didn't really say what that was, but unless they start some new programs or they want to help them out with the down payment or something like that. But I think it has to do with the stress test. I think that they will be either removing the stress test or bringing it down maybe from 2% to 1%, or maybe 0.50%, something like that. So it'll be interesting to see what Bill Morneau says. They do want to generate publicity and obviously votes. At the end of the day, they want to generate votes, and that's why they haven't come out and said what it is yet. They're probably waiting as we get closer to election to come out with all the goodies, as many political parties do out there. They try to play play you, and you got the NDP putting policies to bring affordability down. Hasn't really worked. Now you're going to have the Liberals coming, hey, wait, this, these policies that were put in place by this government is not working. Why don't we try this? So that's something that you will be seeing over the next couple of weeks, and we'll see what happens with that. Just taking a look at my notes here. What else I want to talk to you guys about? There's obviously a lot of pressure with prices coming down as well. You have a lot of people that have been tapping into their home lines of credit, the HELOCs that we like to call them. A lot of people tapping into that and not paying them down. So, there's only so much people can do that, right? You have people that are using this as basically bank machines, and they're using this to go on trips and try to do different things with that money, which is supposed to be there for renovations or whatever the case may be, but some people are just using a bank machine. So if this continues and interest rates do start to rise, we could have a problem. Talking about interest rates, the rate didn't go up this last time the Bank of Canada met, and we actually just saw a rate decrease from two major banks. You got Royal Bank and you had Bank of Montreal that announced their 5-year rate went down. So it's still, we'll have to wait and see if that's gonna motivate or kind of reactivate the market, particularly as we get into spring. Once again, I think it's a more global situation that's happening right now. Even though banks will reduce rates, even if the federal government takes away the stress test or reduces the stress test, I think it's a more of a psychological situation right now. And real estate is, as well as economies, they're very, very psychological. If you know that you're doing well, and if your house has risen in value, and you have the money or the equity to tap in or so forth, people tend to go out there and spend more, and it's a very psychological thing. So right now, even if they put out there lower rates and no more stress tests, I don't think it's going to be enough to motivate people to jump back into the market. I think that these things take time. There will become a point where people get tired and they get bored of, I think it's been enough time now. I need to buy a place regardless of what it costs. And if it's come down 10%, yeah, maybe it'll come down another 15 or another 10%. But, I need a place to live. As long as you're going to live in your house for the next 5 years, 10 years, who cares? Take advantage of, if there are lower rates and if the market has come down, you have the ability to go buy and take your time to go look and buy a place in a more stable market. There's nothing wrong with buying now. There is nothing wrong with doing that. I think on the contrary, I think that the money's made, or the good deals are made when you're buying, and you want to take advantage of opportunities where the market slows down. People should be buying when the market slows down, and they should be, if they are planning on selling when the market is going crazy, right? That's the ideal situation. That's what people tell you to do all the time. But for some reason, when it comes to real estate, people tend to kind of do the opposite. They go crazy when the market's crazy, and when the market's slow, they tend not to do anything. So it's just a different mindset. Again, it comes down to psychological, and the economies are moved in a psychological way. And you can feel right now that not just Canadian economy, but worldwide, there seems to be a sense of slowdown, and it's time to slow down and not activate or do big purchases, and that's what's happening right now in the market. So it'll be very, very interesting to see what happens over the next couple of weeks. I think that we will start to see a bit more pressure on our governments particularly from different associations to do we really need the stress test or these policies when the overall world economy or Canadian economy is not doing well. And it'll be interesting to see how the policymakers react. We have Bill Morneau coming out with new rules, and we'll see what he says. I think that also the NDP has really had a lot of pressure on them with the speculation tax, and people haven't even paid their first bill. So as soon as you get a couple people having to pay these $15,000, $14,000 bills, it's going to be out there, and people are going to be mad. And when people get mad, they try to look for solutions, and governments don't like when people are mad because they're not getting votes. So, I think that policies will start to come down. At least the curtains will come down on these policies a bit, and we'll have to see how people react to that. Anyway, thank you very much for listening today. If you like this video, I ask that you subscribe, and we'll continue to give you some good content and give you some more information on the market. Have a wonderful day, and see you next time.